Hey, what's up guys? It's Ezekiel Chiu here. So let me hit you with this. Most traders lose at scalping for one simple reason. They get in too early. And then what? And then the market takes them out before making the real move. So you have seen it, right? You enter the trade, you feel all confident, and then what? Seconds later, your stop loss got hit. And then price shoots exactly where you wanted it to go without you. So here's the truth. Scalping isn't about being like fast. It's about being precise. In this video, I'm going to show you my 3 simple scalping setups that cut out the noise. It helps you to avoid all the fake moves and gets you in at the exact moment the market is ready to explode. I mean, once you learn this, you never look at scalping the same way again. Let's get into it. So now let's set the record straight. Scalping is not like chaos, it's precision. So the traders who last are not the ones who fire like 20 shots a day, right? They wait for high probability setups, strike, and then they step away. Profitable scalping rests on 3 things: structure, timing, and liquidity. So in this video, I'm gonna give you the 3 overlooked scalping strategies. Let's get into it. Secret number 1, the scalper's trend filter. You see, the average scalper, they treat every chart like a battlefield. Oh, this is a chart. I'm gonna find where's my entry, this and that. They fire entries in like every direction, trying to snipe every move. Oh, it's gonna go down here, it's gonna go up here, this and that. No. Here's the truth. Most of those trades should have never been taken in the first place itself. Right, so this is where we apply what I call the scalper's trend zone. This is a simple but powerful way that will instantly weed off all the bad setups and you lock in on trending opportunities. It tells you this is the scalper's first checkpoint. It filters trades that are in line with the trend strength. So it's built on one core principle. If the market is not trending, you don't trade, you wait. So now, here we go. To identify the trend, we use 3 EMA, exponential moving average. The 25, the 50, and the 100, which is all plotted on the 5-minute chart. So these are your filters, your confirmation areas, your anchor itself. So here's how it works. You only look to trade when all 3 EMAs are pointing in the same direction. You know, sometimes they can crisscross, sometimes one can go up, sometimes one is going sideways, one is going down, that kind of thing. You only look to trade when all 3 EMAs are pointing in the same direction. And that's rule number 1, right? Rule number 2, they are cleanly separated. All 3s are cleanly separated from each other. They are not tangled, they are not sideways, they are not messy. That is your first filter. If the EMAs are stacked like neatly and price is outside of the 25 EMA, now we are in business. That's where the market is telling you, hey, I'm trending right now. Come on in, join the trend. Let me give you an example. Let's say the 25, the 50, and the 100 EMAs, they are all angled in upwards. So with strong spacing between them. That's your sign. So now, if price pulls back and closes near or just below the 25 or 50 EMA, you are going to watch closely. This is your cue to enter, but not yet. Don't jump in just yet. Here's the rule. If price breaks below the 100 EMA, your third line, you cancel the setup entirely. Don't even think about entering anymore. You have not entered yet, but if price breaks below the 100 EMA, that's it, you're done. The 100 EMA is your safety net. To break it down step by step, number 1, you confirm the trend. All 3 EMAs, they must align and they must spread. Number 2, you watch for price to pull back to the 25 or the 50 EMA. Then number 3, you wait for price to bounce and reapproach the 25 EMA. It's gonna respect there, it's gonna bounce, and then when it reapproaches it, then number 4, do you enter the trade? Hey guys, Ezekiel Chiu here. So, scaling through a funded account can be frustrating. I there are long evaluations, there are delayed payouts, and rules that it's designed to hold traders back. This is a common struggle in prop trading, right? And that's why funded trader markets has been getting pretty much attention. You know why? It's because they introduced a fresh approach designed to give traders more control and flexibility. So one of the biggest highlights is their on-demand payouts. Yeah, so traders are receiving payouts in average of just 2 hours after hitting their targets. And if payouts isn't processed within 24 hours, they double it. This is a bold move that have already set them apart. And then there is also 100% profit speed. So it means what? Traders can keep everything they make. So there's no hidden fees, there's no commissions, it's just full control of profits. I mean, it's pretty good, right? So flexibility is built into the system as well. Low spreads, 1:100 leverage, swap-free accounts, right? And access to multiple platforms like what? MT5, C-Trader, Match Trader, and Trade Locker. So, and for you who are trading crypto, the markets are open 24/7, even on weekends. So with round-the-clock chat support available as well. I mean, that's cool, isn't it? So, I mean, despite all of these features, funded trader markets, they remain one of the most affordable funded programs out there today. So, for all of you traders who are aiming to scale faster, access payout quicker, this platform is worth exploring, right? Check out funded trader markets, link is below. If price behave, you enter on the bounce. You aim for a tight but a logical profit target. If it breaks the structure and it drops below the 100 EMA, what are you gonna do? You walk out from this trade. You don't even think about entering it anymore. Get it? It's as straightforward as that. Why is this so powerful? Because this filter, it removes 80% of the low probability trades. It keeps you out of the choppy markets. It avoids all the reversal traps because the trend is strong. And then it anchors you. You don't enter, you don't chase it. It anchors you to the momentum when it pulls back and when it goes back up. This is how real scalping is done. It's not just like, oh, I'm going to fast entry, I'm just going to go to chase. No. These are filtered entries. How do you set your take profit target on this? Let's look at this, another example. We got a bullish trend on a 5-minute chart. All 3 EMAs nicely, cleanly stacked up. Price pulls back to the 25 EMA. It does not pull back to the 100 EMA. Check. So now price moves up again. It touches 25 EMA from below. Then when it breaks above, that's your entry point. All the more better with a nice green bullish bar itself. Bullish bar means good momentum. When bullish bar closes above the 25 EMA, the momentum increases a whole lot more. So that will be your entry. Now your stop loss, you set it just where? Below the 50 EMA. It can be below the lows of that low, that swing low, or below the 50 EMA as a safety buffer. And then your take profit, 1.5 times that distance for the risk to reward ratio. Simple math. There's no emotions at all. This is how you build consistency. And so now, this is the uptrend. And then if it's in reverse, it's the same. If all 3 EMAs are now aligned downwards and the candles are trading below the 25 EMA, wait for the pullback to the 25 or the 50. As long as the 100 EMA stays untouched, you got yourself a valid short setup. Same entry logic, same risk management, same results. You are filtered with scalping with precision. Secret number 2, the flip zone trap. In secret 1, we filtered the trend. We filtered the market before we even think of trading. So that is trading in line with the trend. We make sure that we are not stepping into any noise. So we are already in the trend. That's secret number 1. Secret number 2, this is different. This is where it kicks in after the zone is identified, where price is testing a potential reversal. We want to know exactly when that momentum flips. So this is about avoiding chops. It's about sniping the moment the market shifts power. I'm giving you all the different kind of scenarios. You got yourself in a trending scenario right now. Now I'm going to show you how to enter when the market changed, let's say from uptrend to a downtrend, right smack at that moment. So that once you got all these 3 strategies that I'm going to show you, you can now trade every day in every single scenario. So now let's break it down. Scalping doesn't mean you trade every small move. So which is what I said over and over again, right? You're not here to capture every wave in the market. No, if you're going to do that, that's going to be really, really tough. You are here to catch the right wave at the right spot short and get out before it crashes. What is a flip zone? This is the critical moment where the downtrend, it stalls and then it turns into an uptrend. In technical terms, this is where the market stops making lower lows and it starts to make higher highs. That transition from weakness to strength, that is your goal mine. Now, you do not need like, oh, I need 10 indicators to see this. No. All you got to do is to just watch the price structure. Let's say price is trending down, forming what? Lower highs, lower lows. Suddenly, it bounces from a support zone and then it doesn't break the next low. Instead, it holds, then it pushes up higher and it breaks the most recent swing high itself. That is your flip zone trap. This is where the pros enter. While the retail traders are still waiting for confirmation, this is how you spot it like a sniper. Alright, step number 1, you find your structure zones. You use the 15-minute chart to identify the support or resistance zones. So these are the areas where price has reacted before. These are your battlegrounds. Step number 2, you watch for the downtrend or the uptrend into the zone itself. So you're looking for the moment where price slows down and maybe let's say it forms a double bottom, or if it uptrends a double top, or even it just like hesitates at that area. Then what? Step number 3, you wait for the break of the trend. You can use a simple trend line, right? If it's downtrend, you draw the line connecting all the lower highs. And if price breaks that line, it means what? The momentum is changing. But we are not just going to rely on the break of the trend line itself. We need to follow through. If price breaks the trend line, but then it stalls without showing a clear higher high or higher low within the next 5 to 7 candles, you cut, you scrap the trade. That's not a flip. That is just the market is hesitating. So don't guess, right? You got to wait for the story to be clear. So now, step number 4, we look for a structure shift. Higher lows, higher highs in a reversal, or the opposite in a breakdown. So this is the flip zone. This is where the money is. So now, you gotta be careful. Just because the trend line breaks, and that happens a lot of time, it doesn't mean you jump in blindly. You wait, you observe. The market, this is where a lot of amateur traders, they get caught out by learning just trend line break. The market must prove that it is flipping. You want to see a series of higher lows or a solid rejection candle at the zone itself. One of my favorite confirmation is what? A bullish engulfing candle right off the zone, or a pin bar with a strong wick rejection. So these are your telltale signs that the smart money is now stepping in. So now once you see that, you mark your zone and you set your entry and then you let it come to you. Good? Now, next. This is the one that you have been waiting for. Secret number 3. The liquidity shift trigger. Quick pause. If you found this video helpful so far, here's something that always surprises me. 73% of you who watches this video regularly haven't subscribed yet. I mean, if you're getting value and want to support what we are doing, the best way is just to hit that subscribe button. It's free and really helps us to continue creating better content for you every single week. It truly means a whole lot to us. Okay, now let's get back to it. So if you have stayed on till now, you better finish this. I showed you 2 scenarios earlier. Now this is the one that is going to add to your arsenal, and that is the game changer. This is how you're going to catch sniper entries after the smart money has triggered all the stop hunts and before the retail crowds even know what has happened itself. This is powerful because once you understand this, you never look at price action the same way again. Most traders, they get stopped out. Why? Like I said earlier, they enter too early. They think what? They think the demand zone, right? It comes down, oh, there's a demand zone. The demand zone is the entry itself. But the pros, no. They know that the price is going to go deeper first to grab the liquidity, and that's what the institutions do, right? They build the liquidity, they sweep the liquidity, and then they move the price itself. This is so much more in effect when you are scalping because it moves so fast. Let me walk you through it. Step number 1, structure. We got to understand the structure first. So we start on the what? The 15-minute time frame. Now, just like in the earlier examples, we want to first wait for a clear break of structure. This tells us that the market has what? A directional intent. There's a break of structure. Let's say a lower high to now a higher high. It break the most recent high. It now has directional intent that is changing its direction, for example. So a bullish break of structure tells us what? That we should be looking for buys only. Number 2, we find our point of interest. This could be a demand zone, an order block, a flip zone, or any area that led to the break of structure itself. That is our big zone. But we are not entering at those zones, not yet. First off, there's a break of structure. We want to find where are our zones, right? So we want to get it ready at all these zones. So we want to identify those zones. Demand zone, order block, flip zones. But we are not entering yet. Number 3, here's what happens. We drop down to the 1 minute chart itself. Here's where the magic begins. We wait for price to mitigate our 15-minute point of interest. Meaning to say that, right, when price steps into it, that zone is considered mitigated. All the smart money concept. But still, we don't enter yet. Why? The institutions are often, they're still clearing out all the retail traders who jump in too early. So we wait for a very specific event. And this event is called a liquidity sweep. So this is where the price, it takes out the equal lows or equal highs just below that zone itself. This is where the market hunts those early buyers or sellers itself. So now, once you see that sharp wick down, that sudden spike below a key level, that is what? This is the smart money sweeping the liquidity itself. If you're new to smart money concept, this is where you are getting exposed to it now. This is the exact moment where we watch for the next movement. Step number 4, the market shift. So after it goes down, it sweeps the liquidity. You want to see the market shift, a shift of the most recent internal high if you're buying or internal low if you're selling on the 1 minute chart. So this confirms the reversal from a bearish to a bullish structure. This is the real move. So here's the filter. If that shift don't come faster, we drop the setup. You got to give it 5 to 6 candles on the 1 minute chart. That shift from, let's say, from the breaking below to going up. If there is no clean break of the internal structure by the 5 to 6 candles, by then, that sweep didn't attract the smart money. So if there's no shift, there is no trade. This is the rule that you got to follow, that shift. Now, when that happens, you are ready to enter the trade. But wait, you still don't jump in yet, because here's the final gate, right? The moment you confirm that the zone is worth your risk, right? We don't just enter because we hope that, oh, now that this happens, I think the zone is going to work. No, we enter because the market shows us that they are committed to making this move run. This is the difference. And this is where we apply what I call the zone commitment check. This is like your last defense. If you see, I'm adding a lot of layers to it. This is why the probability is really high. This is the filter that's going to tell you, yes, the smart money is here. It is now reacting. Let's go. So once price taps that refined zone, the one that is created after that market shift, you want to see a clean reaction. Maybe a sharp wick or engulfing candle or even a mini break of structure at the area. If you really want to take this to pro level, we can tighten it even more. So after the liquidity sweep and the market shift, we don't need to use the whole zone for entry. We can refine it to the last push candle, the last candle, the one that broke the internal structure itself. Alright, so this is usually a bullish or bearish order block right before the break itself. That refined candle becomes your point of interest because you go right there. It gives you smaller stop loss. It gives like a real high precision level. It gives you big because you're entering off the candle that caused the break. This is the footprint of the smart money concept, right? It's not just clean, it's very precise, targeted. This is where they entered. And this is where we strike together with them. So once price return to tap this candle with reaction, that is the sweet spot. Number 1, the scalper's trend filter. Right, that's where you align the trend with the triple EMA against the momentum. You're trading in line with the trend. You're trading with momentum. You filtered out the noise already. Right, you're now staying on the right side of the trend that can keep going. This is real powerful. Then we talk about strategy number 2, the flip zone trap. This is where most traders, they got caught out at those trend line breaks or those support flips, right? But we don't fall for that. We look for the reaction, the shift. And this is how we catch the reversal after the trap has been set. This is how we get in high risk to reward ratio right at the turning point, before the start of the ongoing trend itself. Then we went to strategy number 3, the liquidity shift trigger. This is one of the sharpest tools in a scalper's arsenal. This is where you let the smart money concept and you let the smart money take out the stop first. We wait for the internal structure to flip, and only then the zone shows the real commitment, and that's where we strike. Okay, so here's what to do next. I want to give you something that's going to change the way that you trade forever. So I've put together a free training that walks you through the exact 3-step system that I use to find high probability trades with sniper level entries, real risk control, and zero guesswork. So this is the same system that I use myself, and the same one that has helped thousands of traders go from frustration to consistent wins. And I'm giving it to you for free, right? There's no fluff, no fueler, just pure strategy. So if you ever wanted to trade with clarity and real conviction, this is the place to start. So click on the link in the description below, and I'll see you inside the training.